Hello, chart watchers and Decision Point faithful. Welcome to this Thursday morning, June 18th Decision Point show. We are recording Wednesday afternoon, so we will be looking at all of the charts that just closed out on Wednesday. So you'll be ready for you to start your morning today on Thursday. All right. Thank you very much for joining us. And if it's your first time today, we really hope you come back. And of course, for that group of our Decision Point faithful, we welcome you back and thank you for your subscribership. All right, let's go ahead and look at our agenda. And as I get that up, Dad, how are you doing today?
I'm pretty good.
All right, so we are going to look at today, we'll of course do our S&P 500 review. I want to talk a little bit about our climactic indicators. I looked at that chart yesterday before on Tuesday afternoon, and when I wrote, I was looking at a buying climax, and we did see that that drop that was expected today. So I want to just go over a couple of the things on that chart that I found interesting and that look interesting since the market closed today. We will also talk about, we had 4 PMO SELL signals this week on our DecisionPoint scoreboard for the S&P 500, 100, Dow, and Nasdaq 100. So we'll look at those charts. And then, of course, we will finish off with the DP Diamond of the Week from my DP Diamonds report on the DecisionPoint.com website. And speaking of the DecisionPoint.com website, I invite you to try out our reports with a free 1-week trial. You have to subscribe to the bundle package so that you can try out both of our reports. And then you use the coupon code DP trial. As long as you cancel within that first week, you will not be charged. So come give us a try, see what you think, and hopefully you'll stick around and float along with us as we travel this market. All right, so let's start off with those Decision Point scoreboards. Very interesting, as we did have quite a few rally days in the last week, but that did not help the momentum. We ended up with these 4 new short-term PMO buy signal or sell signals. These appear on the chart, on the daily chart, when the PMO crosses below its signal line. So that's how those ended up being there, and we'll go look at those charts shortly. But before we do that, I wanted to look at the Decision Point sector scoreboard as well. As you can see, we have buy signals in the intermediate term right now. These are all of these sectors have what we like to call a silver cross, where the 20 crosses above the 50-day EMA. And so that's where we get all those buy signals. The long-term trend model signals are determined by golden crosses or death crosses as well for the sell signals. But we look at golden crosses are where you get the buy signal, and a death cross is where you end up with that sell signal. So that just gives you a little bit of an idea of where we're sitting right now. And the long-term buy signals right now, technology and healthcare, not really a surprise to me. Those have been 2 sectors that have been winners. And discretionary and communication services, those also have buy signals. I think, Dad, what I find the most interesting is that those defensive sectors of consumer staples, if you will, and XLU still haven't gotten those buy signals, those golden crosses. And I suppose it's a sign of the times right now from that rally off the bear market bottom.
Right, it's just a lot of damage done.
Yeah, absolutely.
You know, we have the golden cross and the death cross on the long-term model, and we only have a silver cross on the intermediate term. I'm thinking maybe the downside should be a COVID cross.
There you go. Right? A COVID cross. Yeah, at this point, that's certainly been manipulating those 20 and 50-day EMAs over the past couple of months. So, yeah, absolutely. All right, well, let's go ahead and look at some of those charts. I wanted to start off with looking at the S&P 500. And we'll start off with the 5-month candle, and then I will move into the climactic indicators chart for the S&P 500. But here's what we're looking at. We had that island formation, and we got the big drop, you know, that formed that reversal. And then after that, we had 3 days of rally. But interestingly, we had declining tops, even though these 2 days were rallies. And you know, that was already a high sign to me that something might be up. Our PMO had already turned down and was continuing lower despite 2 days of rally. And then we got yesterday's giant rally that tried to go up and cover that little gap that was formed with that island reversal. And it formed what looked like a hammer. Hammers are bullish if they come in at the bottom of a decline, but when they come in at the top of a rally, that is considered what we call a hanging man. And that is a bearish candlestick. So I was comparing that to some of our climactic indicators. And like I said, I'll look at that chart next. But the main thing is that, you know, we've had 3 days of rally. Today we did get that pullback on a pretty interesting trading day. I have to say, I'm going to look at that.
Okay.
Yeah, go ahead.
Well, before you go to another chart.
Okay, here we go.
I was going to say that that the action on the market, you know, in spite of that huge down day we got last week, it's just, you know, instead of getting follow through on that, we did. It's still got a bullish bias to it, and it's just maddening. It just doesn't want to go down. We had some good a good support line there, and you know, you had you showed a line of resistance against that gap in February.
That one?
Yeah, there you go. So that's where the markets run in up against the resistance.
Yep. And exactly. And I don't suppose we're going to pop up through that just yet. We do have that bullish bias, but there are so many of our indicators that have really been confused, I would say. I think yeah, go ahead.
Yeah, what I wanted to explain about the bias is basically if the market had a neutral bias, every time it got overbought, it would sell off. And every time it got oversold, it would rally. Mm-hmm. But when the bias moves one or the other, you have a tendency at this point in time to rally. I don't know if we're topping out here, but could be. But still, we're not showing any continuing tendency to go down. It just is resisting that.
Absolutely. And again, I think the discussion out there has been where does a person put their money when, you know, you can't put it in savings or even in bonds and expect to get any kind of a return. Metals have been, yeah, a pretty good place to be. But what does that leave is really equities. And it seems to me that a lot of this is not only the Fed pumping in the money, I think we've talked about that before, but also, you know, the fact that a lot of people are, well, what do I do with my money? And they want to throw it in there. So I think that's certainly helped with this rally, and it has given us this bullish bias because it seems that people are almost forced into the market at this point with all of its risk.
Right.
And you did note when we were talking before the program how low volume was today. What do you make of that? Are you thinking that that's, I mean, it was a down day.
Yeah, I mean, that's really not, it's kind of encouraging if you're bullish because on a down day, it should, volume should contract. You know, that's really a bullish sign. Mm-hmm. But to point out something here, on total volume, we use a 250 EMA, which is about 1 year. So it's a little more demanding, say a 50. So if you were using the 50 AMA, maybe the volume would have been above it. But I think I've always liked the 250 because it's a little more stable.
Mm-hmm. Right. And today, in the last couple of months, we've only been below that average. This will be the third time since February. So,
yeah.
So maybe things are calming down just a little bit. We'll have to see.
Notice that the VIX is curling over.
Yes, and I was going to look at that short-term climax chart. Here we go. Let's see. Oh, wrong way. Go back up here. This, I write about these every day, well, Monday through Thursday, and Carl writes about them on Fridays. But this is our climactic indicator chart. We use this, it gives us sort of that ultra-sensitive look by tracking the net advance declines and the net advance decline volume. It gives us a really good flavor when we get these climactic moves. And you can put it all together and come up with, you know, really, I think a pretty good guide to what might happen over the next day or two. I mean, these are really, really short-term indicators, but I think they came through for us yesterday. And I say that, yeah.
Yeah. Okay.
Yeah, and I say that because we got these really climactic readings here. This is from Tuesday right here. And you can see I've marked it, and these are very climactic readings, especially here for the net advanced declines. And so we were seeing this. We had the VIX, you know, it moved on our inverted scale. It moved back up into the Bollinger Band on Tuesday, but not in a, you know, it didn't get to its average. We were seeing a little bit of an increase in volume yesterday on that move to the upside. But between that hanging man candlestick, which I talked about at the beginning of the show, and then seeing these highly positive climactic readings, it really, to me, reeked of a buying climax or a buying exhaustion. And I think that really played out. We had the PMO had just given us that PMO SELL signal. I mean, there were just a lot of things that were pointing to me that in the very short term, we should expect a little bit of a decline after that big move to the upside that we saw. So I think the climactic indicators can be quite helpful. And I will just say, I don't want to spoil it for all of our subscribers by putting all of the charts up here, but I can tell you, and here's the short-term indicators. I can tell you that they had all turned up yesterday. This is interesting to see the 20 stocks above their 20 did fall today, and that's been a really good indicator, and that gives us some declining tops here.
Yeah, but that's only confirming.
Yeah, that's true, because we have declining tops here.
Right.
I'm always looking for those for that negative divergence. And, you know, we're getting those declining tops, but like you said, it's confirming the declining trend that we're already in. But I found it very interesting that yesterday, all of these indicators had turned up. They were moving in the right way. Yet I had to come out and say, I think we're going to have a decline. That was a little bit, I felt a little odd doing that, but at the same time, I always let everybody know why I'm thinking those things. So, all right, I promised a look at the, go over here, the signal changes on those PMO SELL signals. So let me go ahead and we'll just very quickly, the Dow was one that turned just today. You can see we just got that sell signal. And again, coming off of a couple of days of rally, and what we saw on the other indexes coming off a couple of days of rally, and you get a sell signal like this, it certainly does put a little bit of I won't say a bearish bias necessarily, because we were just talking about that, but it certainly raises a caution flag, if nothing else.
Right. Well, the bias is really, it's just that you get the clue in the way the market is behaving, you know, and over top of the condition. So if it's overbought and still behaving well, it's you know, kind of it's a bullish bias. Although I look at this and I say, well, that's a very oversold PMO, and we've got a crossover. So yeah, I'm feeling a little bit more like there's a chance of a bearish outcome here.
Yes. And you know, they all, of course, these charts all look very similar, except for the Nasdaq, which has hit all-time highs. It looks like it's trying to make its way back up there. It's been on this rising trend, pretty much solid trend. And you can see the PMO there. We've got that sell signal that came in on, I think it was last Friday. Yeah, last Friday. And you can see we got that sell signal, and now it's already trying to turn up today. Certainly a much more bullish bias on the Nasdaq 100.
Today's action, it closed slightly down, but it made a rally high, you know, for this short rally. It made a high today on contracting volume.
Yes, you can see it's been contracting all the way down as it's moving up. So
Yes,
between
right.
that and a little bit of negative momentum here, I mean, for me, when I look at these charts and I look at the OEX, you know, I suspect we are, with the momentum shifting to the downside. We've got confirmations here with the OBV, you know, failure to get above that resistance. You know, all of this tells me that certainly we are, I guess you would say, due for a pretty good sized pullback. But my sense is that we probably will hold this area of support at these lows back here from last week.
Look at the OVV.
Yes.
Notice that the last the top last week.
Mm-hmm.
Yeah, no, the one
This one.
before. Yeah, that's much higher than the February tops. Notice that's a reverse divergence.
Right. So despite getting this increased volume coming in on this rally, we still were not able to get above that price level. So we had all this extra volume.
Right.
And then we didn't get up to that price level. So yes.
I'm not so in love with divergences that far apart, but still, I think it in this particular case, it makes a point.
I think so too. So there's your OEX with its sell signal as well. There we go. And the S&P, we did look at this quickly, but there's that sell signal just to give you context. So we have all of those four with PMO sell signals. So momentum has shifted negatively. We failed to cover that one gap. Let me get the better chart up here. So there's a lot to put together here. All right, so we came up here to that gap, failed to actually even test that area here on the SPY, which I found interesting as well. Got the reverse island, came down. We did hold this support area, and that's the support area that I think, and you can see right here too at these two tops. This looks like pretty strong support, and it also coincides with not only the 50-day EMA, but also the 200-day EMA. So this, I would say, is a very strong area of support. So I'm expecting a downtrend because of, you know, the momentum shift, but I don't think we're gonna see a big disastrous fall below this strong support level, at least not yet. And our other indicators are still pretty positive right now. All right. So I'm going to go ahead, and I think we should look at just a couple of these sectors. Was there a chart you wanted to share?
No, not particularly. No.
Okay.
Not at this point.
Not at this point. Okay. So these are from our sector chart list that you can find on our DecisionPoint.com website. I will show you exactly where you can find it. These chart lists are only for our subscribers, but they are right here. Carl curates them. You do this pretty much every day, am I right?
Yeah.
Every day he updates his new annotations. That's part of what you get if you are one of our subscribers. So I did want to show you, and what I'm going through right now is this DecisionPoint sector chart list right here. There you are. So I'm going to go over here where it's easier for me to manipulate. But what we have here, of course, you'll recognize the RSI, the PMO, and the OBV. But what we also have for each of these sectors is our Silver Cross Index and our Golden Cross Index. Those are the newer, our newest, I would say, indicators that you came up with. And so we can see, based on the members of XLC, in this case, how many of them have a silver cross. Well, that would be a little over 88% of them. and how many have golden crosses right now, and that would be roughly 35%. So it's just an interesting way to keep track of the internal strength within that sector. We also have that bullish percent index, which we find very helpful because you can see it's a bit more sensitive than, say, the silver cross and certainly the golden cross, which is a very, very slow moving long-term indicator. And then we have the percent of stocks above their 20 and above their 50-day EMA. So putting these all together, I think it gives you a really good sense of where that sector currently sits. And to me, looking at this, we have that silver cross index. We just got that negative signal. We have the 20, all these stocks that are now falling below their 20 and 50-day EMAs. And this is going on after a rally in this particular sector. RSI still looks pretty healthy though, I have to say. Discretionary, if you recall, is one of the others that are still, that does have a 50 above its 200-day EMA. It has a golden cross. But you can see again, and you should expect to see this pretty much in all these sector charts, overbought PMOs with sell signals or nearing sell signals. So some interesting things to look at here. Again, we're seeing a tipping over of these particular indicators, those percent stocks above 20 and 50. The BPI is flattened out, as has the silver cross, but very overbought right now for that silver cross. I think it's good that we're still seeing the golden cross on XLY still moving to the upside. But overall, you know, seeing the deterioration internally of some of the stocks, and then that PMO sell signal. And then of course, we've been noting rising wedges, which are bearish patterns. XLP, remember this one is still on that long-term sell signal. That's because we haven't seen a golden cross here of the 50 and the 200. We do see a little bit of an uptick here on the PMO after that sell signal, which I find pretty interesting. But if we see a pullback, a lot of times you're going to see a little bit of strength in these more defensive areas of the market, like consumer staples, which had a great run out of the COVID stay-in-place orders. And it really kind of flattened out. We did get that move up in May, but that, I think that was really, it went with most of the market at that point. All right, XLV was one I wanted to look at because this one has been hanging in there. We had the golden cross way back here as well as the silver cross back here in April. Now it's been mostly consolidating sideways, but again, we're hitting that area of support and it's managing to hold on to the 200-day EMA. You know, we're getting that move to the upside, but and I have to say, looking at these indicators, look at the BPI, much more healthy BPI. Granted, these both turned down, but overall, I think that the chart is looking fairly healthy despite a PMO that is moving lower. All right, what was another one? Real estate was one I wanted to look at in particular. So I don't think we'll have time to go through all of these. So real estate's been interesting, hasn't it?
Yes. We had a flag and then another flag pole. I don't think we're going to, well, who knows? We may get a flag out of that one too. But
yeah, we'll have to wait and see what happens with that. But we did, again, you can see that 50-day EMA, and on some of the other charts, it was the 200-day EMA, but that is managing to hold up as support right now. And you could see a little bit of improvement here, at least with the BPI. And notice we have not gotten a sell signal yet in that real estate sector for the PMO, which I find very interesting. Also very overbought and overdue. And we can see also we've got the loss on a few of these indicators on the bottom for real estate. All right, technology has been the new defensive sector. As you can see, coming out of the, we had the bear market, COVID, and up off of that, interestingly, normally technology is a more aggressive sector, but we've certainly seen it turn out to be one of the stronger sectors, even in what you would consider a defensive type environment.
well, it's hit new all-time highs just this month.
Yeah, absolutely. So, it's just one of those areas that I think is attractive regardless now. You've got this with the stay in place, of course, Zoom video, go to meeting. There were equipment as well. I'm still noticing in the technology sector that the semiconductors and then also the equipment industry group are all doing fairly well because of that. But it'll be interesting now that we're starting to open up a little bit and a lot of venture out to work. It'll be interesting to see if it holds up.
Let me take it for a minute. We're
Absolutely.
low on time.
Sure.
I wanted to make a few comments. One of the things, we've got a rising wedge, which I love. Rising and falling wedges, I love them, but this one just hasn't proven anything. It just goes one way out there and then out this way. Not a big, not a,
Yeah, it
not a
seems like it's
very,
disintegrating a little bit.
yeah. But it's just that you say you're looking for this to hold. I'm not particularly. I'm still pretty bearish.
Mm-hmm.
The problem is that you don't watch the financial news, as far as I know, or not very much. And it's on all day with the sound down. But every time you turn around, there's some new breaking news. And for example, let's say widget production. Let's say last month it was down 90% of the high point of a few months ago. Okay, and then and then this month it went up to only 80% below.
Yeah.
Gained 10%. But they would say, they wouldn't say, well, it's down only 80% now. They would say, oh, it doubled over the last month.
Right.
That's the kind of, it's outrageous, really.
Oh, absolutely.
That's just the way it goes. But,
all right. Well, I am going to do the diamond of the week.
Oh, yes.
Yes. And then we can close this out. Okay. All right. So here is the flag formation for alarm.com that I saw earlier. I put this one in, let's see, on June 15th on Monday. I saw the flag. We were getting the breakout from the flag, and it looks like we're getting a continuation. My main concern had been seeing the overhead resistance at the top of this flag, but now that it is executed, I would be looking for higher prices. I will say that yes, the RSI is telling us that price is somewhat overbought here, but if it's going to have a nice move to the upside, there, you could hold those overbought conditions for a while. PMO is technically overbought, but rising still strongly. And I like what's going on with the OBV, making a new high as we broke out above that area of overhead resistance. So
technically, we're out of time.
Yes, and that is our diamond of the week. Hope you join us again for Decision Point on Thursday morning of next week. And until then, we will say goodbye. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.